welcome everyone to What is Financial Wellbeing, where today we'll be taken through a session by Ryan Briggs, who's from Let's Improve Workplace Wellbeing. What we'll be looking at are some of the links between mental wellbeing and how you can improve yours in simple steps. And without further ado, I'm going to hand straight over to Ryan. Thank you.
Brilliant. Thank you, Nisha. And thank you to Grace as well and the PPMA for inviting me on. I'm going to try and share my screen. So thanks everyone for taking the time out to join this session. My name is Ryan Briggs. For those who don't know me, I did recognise some of the names on the screen there. About me, I'm a level 4 diploma qualified financial advisor. That's what the DIPFA means. I've been in financial services for over 10 years. And in that time, most recently was working with a company called Ronsky Wealth Management, part of St James's Place, who some of you might know. And it's quite an interesting adventure really we've been on. I think with the sheer demand for financial wellbeing services has meant that I've set up a company called Finwell, purely to work with employers in the public sector, the private sector of all sizes across the UK, really helping employees understand and improve their financial wellbeing. I think it's obviously a hot topic. We all know why, with regards to the last few years. We've been challenging times. Add to that the fact that we don't really learn the basics around financial wellbeing at school. So we're working with lots of companies now, which I'll touch on. But we set up Finwell, as I say. I'm also created, as some of you might know, Let's Improve Workplace Wellbeing in lockdown 2020. And we work with the PPMA, or a partner of that. And we work with I think there's about 40 councils that we're working with on that to try and help bring together HR managers and those involved with wellbeing to share best practice. So if you're on the call and you're not already involved with that, then it's free to join. Lots of events that go on, and feel free to get in touch with either myself, Nisha, or Grace, and we can get you involved with that. As it says there, I'm a mental health first aider, really passionate about that. I know firsthand that the real intrinsic links between mental health and wellbeing and financial wellbeing. So I'm very proud to be involved with that. And as it says on the other side, I'm an accredited workplace financial wellbeing specialist. What does that mean? Pretty much that I do this with lots of companies now, hopefully know what I'm talking about. We've got a team of about 10 as well. It's grown quite fast, and we're working with more and more employers, as I say, across the country. Various workshops that we do one-to-one sessions, we provide online content, a digital platform, as many tools and resources that we can offer really, because we know that individuals learn in different ways. So that's what we try and do. So just quickly, I won't leave this one on too long in case people don't enjoy sport or football, but a bit about my background. I used to play for West Ham, lucky enough, as a youngster right the way through to kind of the age of 20 as a young professional. But the reason I put this slide in is not because of that. It's really to show. I use this slide in a lot of presentations we give with employers and employees. And it's really to show that I've worked with lots of different people from different backgrounds, of all different levels of success and wealth. And the one thing I've learned in probably 15 years of doing that is that it really, really doesn't matter if how much you earn. If you earn more or come into money, that's all great. And money is very, very important, of course, but it's not the answer when it comes to financial well-being. I've worked with lots of people who, money's not a problem, but still their attitudes, their beliefs, their behaviours, their habits aren't quite there, which can have a massive impact on our financial and our mental well-being. My favourite quote on this is the fact that the one thing more important than our ability to earn money is our attitude towards it. And I kind of stick by that, and that's one of the philosophies of Finwell. But on with the session. The agenda will go through some questions actually to try and get some engagement from everyone, and feel free to share in the chat some thoughts, just some words or sentences on some questions. We'll have a little look at what financial wellbeing actually means to you, because it's talked about quite a lot, but what does it actually mean? It's a very personal and subjective thing. We'll have a quick look at what affects our financial, mental, physical and social well-being. We'll look at some ways and share some ideas on how we think we can actually improve our financial well-being. And then what I thought might be useful is actually to go through the 4 steps that we designed for anybody really. We work with employees obviously, but anybody can do this and hopefully at the end of it understand financial well-being a bit more and have some next steps. And we call it a financial power plan. And I'll explain that in a bit more detail. And then we'll try and quickly look at some top tips around kind of life's journey really on financial well-being. I think it's really, really important when we work with companies is that it's really relevant and linked to life events. So that's what we'll try and do. We'll then have some time at the end for some Q&A. So the first thing to look at, I don't really want to sort of dwell on this too long. I think we all know the challenges that we've been through the last few years. And now what we're going into with, increased cost of living, with interest rates, inflation, lots of challenges, and some stats here to sort of demonstrate that and demonstrate the links between, worries, stress, anxiety, what that then brings, with regards to physical well-being, losing sleep over money worries. It can affect social well-being as well, obviously mental well-being. But the shocking thing really that these stats are actually pre-pandemic. So a lot of the stats I've seen unfortunately only got worse. The one that we're trying to improve on most is the last one there, the fact that only 7% of employers offering some sort of guidance, advice or education when it comes to finances. And it is encouraging, I've got to say, that a lot of employers are doing things now. We're working, we're very busy. There's lots of other providers as well that are doing some really, really good stuff. So it is encouraging, and hopefully there's solutions out there for you. So we'll start with the first interactive question. If I ask Nisha, unfortunately pick on Nisha, and maybe Grace if she wants to share a few words, but really just to start to think about what does financial well-being mean to you, whether it's a few words or a sentence. When you think about financial well-being, what does it mean to you? And it's different for everyone. There's no right or wrong answers, but feel free to pop them in the chat there, and maybe Nisha can let me know what's happening in there. I can't see the chat for some reason, but Nisha, over to you. What does it mean to you really?
For me, I guess it means being in a position where, as you described, I'm not worried or concerned about how I might be able to pay bills or access the parts of my life that I really enjoy. So when I was reflecting on this question, it made me think about my younger years when I wasn't necessarily in the financial position that I'm in now, and how difficult that was in terms of my mental well-being, and even physically, the access to quality food. So yeah, I think for me, if I was to sum up in a sentence, it would be having an understanding of what my financial commitments are and being able to manage them effectively, to be able to utilize and do some of the things that I really enjoy. That for me would define sort of financial well-being. Brilliant.
Yeah, thanks for sharing that, Nisha. I've actually managed to click on the chat, so I can see it now. This is a first for me. It's only taken 2.5 years, Nisha, of using Zoom, but it seems to have made itself a bit easier. So I can see that. Yeah, thanks, Lynn. Able to manage my finance so that I'm not worried about how it impacts me and my family. Yeah, definitely. Again, I think because of the huge, explosion of well-being and all the different areas of well-being, it can be quite useful to try and define what it might be. And as I've said there, it's definitely not certain things. It's definitely not, just how much money you earn. It's definitely not how much money you've got in the bank, or, what car you drive or what holidays you go on. We'll have a little look here. Let me just come back. Here we go. So this is the kind of explanation that a company called Aegon, you might have heard of, give. And it's really about how people feel about the control that they have let me just move this because I can't see it, about their financial future. Relationship with money comes up an awful lot. We focus on that a lot. It's about focusing on the things that make your life enjoyable and meaningful, both now and in retirement. And I think that's really important. It's not just about your future. It's both, what's happening right now and your future. So that's a little bit from Aegon. And the other one that I like to use is from Money and Pension Service. And they believe it's around feeling secure and in control. It's knowing that you can pay the bills today, can deal with the unexpected, and are on track for a healthy financial future. So in short, being confident and empowered. So a couple of explanations there I think are quite useful. As I've said, my personal favourite quote when it comes to money is that, which I share with everyone on our sessions. So the next thing to think about, if we've got a bit of an understanding around what financial well-being is, the next question is, well, what actually affects our financial well-being, both at home and at work? Because I think over the last couple of years, we've realised that might be blurred somewhat, with hybrid working. But it'd be great to share what affects your financial well-being, what certain things might affect yours. Feel free to put it in the chat again. And Nisha, sorry to come back to you, but any ideas on that and what affects your financial well-being?
Yeah, I think, what I think all of us are probably quite concerned about is the cost of living. Unexpected bills that you're not necessarily, well, they're unexpected, so you're not necessarily as prepared as you could be. Family, the supporting other people that rely on you. So I think those are sort of the areas that I would say would affect my financial well-being.
Yeah, definitely. Yeah, cost of living obviously is one that comes up time and time again, and we're doing various complimentary workshops actually with employers around that. So if anyone's interested, do get in touch. What comes up as well with other employers quite a bit, or employees, is if someone was to lose their job, we've had that a lot in the last couple of years. So although your job might be safe, we try and look at the household as a whole, and if a partner might lose their job, that obviously has a huge impact on the the income as a household. So that can be a big factor. Feel free to share just in the chat as we go along on this. And then the final question, I suppose, if we know a little bit about what financial well-being is, and we know what affects our financial well-being, the solutions are really, really important. So how do we think we can actually start to improve our financial well-being, other than the obvious of just earning a bit more money? Again, Nisha, do you mind if I come back to you?
No, that's a great one, and one that someone close to me has really made me focus in on, actually just going through your bank statement, seeing where your outgoings are, because actually there's some hidden charges that perhaps, because it's a direct debit is coming out, you don't necessarily look at in a lot of detail. Contacting companies to see if you can reduce the financial burden that you've got with them. So yeah, that's been really helpful in terms of improving my financial well-being.
Brilliant. Yeah, thanks for that. We get all sorts on this one, and some really, really sort of good stuff that comes up. I mean, obvious things, sort of starting to review the basics again, going back to basics and looking at your budgeting. A lot of people that we work with just don't have a budget, don't have their income and their outgoings written down anywhere, which is fine. It's so common. But we find just that alone, can really improve your financial well-being. Having a handle on the numbers can make a massive impact. Trying to build up emergency funds. We talk about that, and I'll explain a bit more about that in a bit. Something called the 50-30-20 rule, which I'll explain a bit more about, to try and structure our spending and get into good habits is really useful. As you've said, Nisha, reviewing our bills and our costs and our outgoings to see if we can make any savings anywhere, looking at what we're actually spending our money on. One that comes up quite a lot that's really good is talking about it. I think we know that the stigma and the taboo around mental health and well-being, and it's surprising actually that the stigma is even bigger around finances and money matters. People are now more more open to speak about mental health and well-being than they are about financial well-being. And that's great on the mental well-being side, but still sort of demonstrates that there's a long way to go on finances. And I think the other thing is just looking at, getting access to good content to educate yourself, to improve your knowledge, your understanding and your confidence around various kind of elements along life's journey with regards to money and finances. So that's that. So the solutions, as far as we're concerned, and what we try to share, one thing we've learned is that there's definitely a scale. I think it's really important to understand where we're at first. It's a little bit like physical well-being, or if you're going to go to the gym and you're going to try and work out or achieve some sort of goal to lose weight or tone up or whatever it might be, to understand where you're at and then look forward to put some sort of goal in place. And what we try to establish sort of straight away when working with employees is where they might be at on this scale, and whether they are perhaps that crisis point and need certain support and certain help, or they might be somewhere in the middle, struggling or just about surviving, or people may well be thriving still. I know, lots of employees that, because of COVID and the lockdown have actually been able to save some money, which is fantastic, and are actually in a bit of a better position. So there really is no one size fits all. Now we talk about something called your financial power. So the challenge for us when I designed this kind of solution and this service was that we had to go into companies and offer something that could be helpful and useful and valuable for employees of all ages, of all stages of life, all family situations, different levels of interest and experience, some having children, some approaching retirement, all different sort of situations going on. So we came up with financial power, spelled PAWA, and I'll explain the 4 steps there and invite everyone to maybe jot down some notes so that hopefully you can sort of have your own financial power plan by the end of this this presentation. So as I said, we look at it as PAWA. So the P standing for your personal money score, really useful to establish, as I say, a benchmark, really, a score like we could have for our physical weight, whether it's muscle mass or just weight or hydration levels, whatever it might be that we want to improve. We only know if we can improve it if we've got some sort of measurement mechanism in place. So we look at your personal money score, which we'll go through. We then look at your areas of focus, because I think what we've learned is that there's just so much to think about. When it comes to our finances, we've got to think about retirement and pensions. We've got to think about investing our money, and where do we do that? Looking after our family, getting onto the property ladder, budgeting, emergency funds, debts, all of these things can overcomplicate things. So we try and break it down into kind of 5 key areas and let people focus on one at a time. So we'll go through that. The W is all about, dependent on the person, what are their next steps? And it's different for everyone. And we kind of believe that people are on a journey, and the 3 key elements are access to financial education, financial guidance, which we believe is the next step. It's not quite advice, but it's actually speaking to a human being and being signposted to relevant information so that they can then take the next step. And then advice. So some people are ready for financial advice, professional advice, whether that's on a negative side because they need to look at, debt management, and there's various organisations we work with, Step Change being probably the main one, fantastic debt charity, so offer free advice, right the way through to paid for advice, whether it's financial advice, mortgage advice, legal advice. Some people are ready for that, and then it's kind of signposting to how that works and if it's right for them. So we'll go through this very quickly. The general kind of scale we work on is a 1 to 10 scale, and as you can see there, if you kind of have negative feelings about it, you don't really feel in control, don't really feel you have enough knowledge or understanding, there's no real focus or plan, then you might be the kind of 1 to 3. If you're somewhere in the middle, it might be around 4 to 7. And if you are feeling confident and in control and that you have got a handle on things, it might be an 8 to 10. So if we go through this as an exercise, the 5 questions that we ask employees and individuals when we do these sessions is these 5 questions. So the first one is all about just your general knowledge, understanding and confidence about money matters. So it's real just out of 10, with 10 being, you know, pretty good and 1 being not so good. Don't put it in the chat, feel free, it's completely confidential, but maybe just jot down how you would score yourself out of 10 on that. The second one that we talk about is really important. It is about our relationship with money. And it's quite interesting. I love the psychology of money and emotions when it comes to money, that we all have a relationship with money. Some are healthier than others, but the fact that our relationship with money is actually ingrained in us by a certain age. I ask people to kind of guess what age they think that might be on our sessions, but I'll tell you straight away, it's actually by the age of 7. And you can Google this. And the reasons for that, because dependent on various things as we're growing up, we're obviously like sponges at that age. And whether there's money available, you know, whether we've got access to money, depending on you know, income to the household. If money is spoken about at an early age is really, really important. If we're given access to money through, you know, pocket money or whatever, and understand the value of money, can have a really big impact. Whether our parents and our guardians and our family members are spenders or savers, that can have a real big impact on us as well. So again, with regards to your own relationship with money, how healthy would you think it might be? Again, feel free to score yourself out of 10 on that one. The next one is about financial resilience. Really, really important. I mentioned about emergency funds before, and this is really kind of having access to some funds, some money that we've saved up that we're not going to invest, you know, it's just going to be in the bank, but it's kind of peace of mind money really. And hopefully understanding, well, how much should I need, and starting to try and build that money up, because if there was an unexpected bill or an emergency of some sort, it's great to be able to have a pot of money to go to and then utilize that, rather than possibly, you know, taking out a loan or getting into debt and being on a somewhat of a downward spiral. The fourth one there, so again, on the financial resilience, feel free to score yourself. And then the ability to pay bills is number 4, literally to survive, get through each month. Some people struggle more than others. So again, score yourself out of 10 on that one, on your ability to get through the month and pay bills. And then the final one, which I've got to be honest, I think most people score lower on when we do this, and that is on future plans. And that's really looking into the future, not necessarily, you know, it doesn't have to be an old age, but looking into the future, making sure that you've got a handle on how pensions work, how investments work, how much you might need, you know, what are people retiring on at the moment, and if there's a shortfall. And again, score yourself out of 10, feel free to do that, how you feel, how confident you feel in that area. So all we do really then is, hopefully if you was to add those figures up, we do that for the people we're working with, and we double it to get a score out of 100 to make it a nice round number, and then you've got your personal money score. And you might look at that score and think, okay, well, what does that actually mean? Obviously, it could probably be higher than some others, or it could be lower than others. It's not really important. The important thing is that it's a benchmark. It's just a starting point for you to have reflected on all these different areas and thought about, you know, how your relationship with money is and how your financial well-being is, and can then probably identify areas that you might need to improve on. So that's a little bit about that. The next step that we take with employees is to look at what their areas of focus are. As I mentioned, there's an awful lot that can start to get a bit overwhelming, lots of things we need to think about or more likely worry about. So we've broken kind of life's financial journey into 5 key stages or 5 key areas. And what we ask employees to do is really start to think about what ones are most relevant for them right now, because again, it's very, very different for everyone. Typically, people will always need to improve on general money management and budgeting and things like that. So that's normally a popular one that people choose. And then dependent on their age and their stage of life, they might be looking to get on the property ladder. So that's an area of focus. They may be looking to protect their income and their family and get a good handle on that. They may be in a position to start wanting to invest in their future and get a good understanding of what the options are. Or they might be approaching kind of later life and towards retirement a bit more and wanting to know how that all works and what the options are for them. So again, I invite you to kind of maybe put down maybe 2 or 3 maximum of the areas of focus that you might have. Just moving on, the W is all about what your next steps are. So again, it's important to have an idea of what our current situation is, what are our areas of focus, but then what now? So as I've said, we kind of focus on 3 key areas, either going back to sort of education and having access to content that's going to improve your knowledge and learning and understanding and confidence. The guidance session is this, so doing kind of one-to-one sessions and workshops, and then possibly you may be in a position to access advice and need to be signposted to trusted advisors. So again, you can just look at what the next steps might be for you and what you're comfortable with. What we try to do as well is if people are ready for advice, is actually just explain the options, and how the whole advice process works, the costs, the fees that may be involved, depending on what route they might go down, and make sure that they feel confident, at least in knowing what options are out there, really. And then the A, which is probably the most important when it comes to our financial power plans, is the action taking, because there's no point in doing all of this to establish a personal money score and then areas of interest and what the next steps are, and then not do anything with it. So what we try and do is make it really simple what the one thing is possibly to focus on. So what we try and do is we put an email together and confirm the employee's power plan, and then help them, directing them to the areas that they want to try and improve. And that could be anything. It could be, we see people that are in quite a bad place with regards to debt, so we can try and signpost them to Step Change and other organisations. As I've said, we've created quite a lot of content, some video content around budgeting plans and the 50-30-20 rule and emergency funds. So we try and signpost back. And as I've said, if people are ready for advice, we try and signpost as well. So that's pretty much the financial power plan that we work on. Feel free, if anybody's got any questions on that, to pop them in the chat. Or Nisha, if there's any questions that you can think of, do just unmute and let me know. I thought it might be useful to just go through some kind of top tips. So for each of those 5 areas that we've highlighted, just some top tips. So obviously everybody on this call will be at different stages of life as well, and we'll have different areas of focus. So we'll just go through and spend a few minutes hopefully sharing some things, so hopefully you can take something away. So some top tips when it comes to the first area, the money management side. For me, this is just all about getting organised, spending some time on sitting down and going through the figures. As I said, trying to get a budgeting plan in place, whether that's on a spreadsheet or an app. There's many apps that are available for your banks or whatever it might be, or even a good old-fashioned kind of pen and notepad. Really, really useful to start to jot down, get your statements out and look through them, look at your income and your outgoings. A really big tip, I think, we talk about the 50-30-20 rule. And for those who aren't aware of that, again, I'll try and maybe share a link with Nisha and Grace to send out. It's all about looking at splitting your money. So a great habit to get into throughout life, really, and looking at, after you've paid tax, your net income as a household, that potentially around 50% is going out on essentials, looking at your needs. So 50%-ish, doesn't have to be 50%, it's just a principle, really, to looking at things like mortgage payments and rent payments, bills, things, direct debits that you have to pay for, not luxuries, not gym memberships or Netflix or other streaming services. It's really what you'd have to pay for should you lose an income or lose your job. That then that comes back to the emergency fund to have a certain amount of that available. 30% then possibly looking at your wants. It's really, really important, I think, to still allocate money to enjoying yourself, to living. Hopefully, life is short at the end of the day, so allocating around 30% for those sorts of activities, traveling, eating out, things like that. And then 20%, which is the important one for me, really looking at the future you. So trying to allocate up to 20%, depending on what's affordable, that can go into things like building up your emergency fund, maybe starting to save for short-term goals, maybe looking at longer-term investments. And if you get in a good habit of doing that, possibly as you earn more money, as you develop throughout your career, you can kind of stick to that principle, because what that means is the 50% is actually of a bigger amount, 30%, that you're going to be spending on your wants is going to be of a bigger amount, and the 20% is on a bigger amount as well. So there's just a few things around money management. The property ladder, we have a few sort of experts and specialists in our team that talk about this. But a lot of top tips that we try and share for people trying to get on the property ladder is to really get a good understanding of what the schemes are, what ones are available to help with that, help to buy and lifetime ISAs and things like that can really help people. Understanding what the real true costs are of actually getting on the property ladder. A lot of people seem to think it's just the deposit, but it's all often more than that, with legal fees and bits and pieces that you might have to pay for. So they're the kind of top tips that we talk about around the property ladder. Moving on to protecting what's important, and we do various group sessions on this and highlight it in one-to-one sessions as well. Really, really important. It's kind of the cornerstone of financial planning, really, is protecting what you've got. And I think some top tips here is to really, it's not a nice exercise, I'll be honest, but I think one that has become even more important in the last few years is to go through the what if scenarios. If you was to lose your job and your income, if someone in the household was to become ill or critically ill, what's in place there? There may be things that are in place through your work, whether it's death in service and different plans. You may have private insurances, life cover and serious illness cover and critical illness cover, but really looking at the what if scenarios and if whatever you've got in place is sufficient. And if it's not, to look at getting quotes. It's actually probably quite a bit cheaper than you might think, actually, for certain insurances. Obviously it gets more expensive as we get older. But again, if you was to take advice on that from any company, it's worth knowing that it is no more expensive to do that, because advisors actually get paid from the insurance companies that you end up using. So quite useful. The only thing is, obviously, you can do it yourself. It's whether or not you want to do all that information and quote gathering and going through it. So that's a little bit about protection. When it comes to investing for your future, again, a really big area, an area that we come across where lots of people feel that it's very daunting if they've never invested before. Where do they go? What do they invest in? I think the key here is just to understand what the basic options are, how pensions work, how to maximize your contributions into either workplace pensions or personal pensions, understand how state pensions work as well, and understand, I suppose, all the tools that are available to us to start building up those different pots as we get older and start approaching retirement. Probably quite topical at the moment to get an understanding around cash and the fact that, yes, it's good to have a certain element of cash in emergency funds and in the bank, but that with inflation rising, there's still risks associated with cash, because the actual value of that and the spending power of our cash is actually eroded away with inflation. And again, accessing professional advice, if it's relevant, can have a big impact. Obviously, I'm going to say that because that's the background I come from, but I'm also completely aware that people need to go on that journey of education, guidance, and then possibly advice when they're ready. And then finally, just one thing to share with you. I'll try and share this link, but we try and make our sessions as interesting as possible. Here's a TED Ed video that we'll share that really explains the power of compounding and long-term compound growth. And it's the idea is that if you have a piece of paper, just a normal piece of paper, and you fold that piece of paper in half, obviously the thickness of that piece of paper is then doubled. If you was to fold it again, the thickness would double again. If you was to keep folding it, it would keep doubling and doubling. Now, obviously you'd need a certain type of paper to do that, but you can understand the principle. And the question really is how many folds it would actually take to reach the moon, so that piece of paper was so thick that it actually reaches the moon. The answer, without spoiling it for people, is 47. And you might be surprised that it's only 47. That's because of the power of compounding, and the kind of idea that we talk about when it comes to investing is the importance of starting early, really, and letting your money grow, and then that money growing again, because you're getting interest and growth on the growth, if that makes sense. It's kind of like a snowball effect. But I'd highly recommend looking at that video. It's on TED Ed. You can Google it. We'll try and send the links around afterwards as well. And then the final area, really, looking at modern retirement planning. And we call it modern retirement planning because things have changed an awful lot since 2015. There's been new legislation. The way that people retire is very, very different. The way we invest and save our money is quite different. And the options at retirement are very, very different. Many people on the call might have heard of things called annuities, where you would exchange your pot of money for a kind of guaranteed fixed amount each year. A lot of people now leaving that money invested and taking out kind of what they need on an annual basis. So it opens up, the need for advice, obviously, but there's a lot more flexibility in the way we can save for retirement and how we can access our money when it comes to retirement as well. So we obviously do workshops specifically on all of these areas, so that employees can really book the ones that are relevant to them. A little bit we've created, we create for organisations a financial wellbeing microsite, which is quite useful. So when I talk about people that just need to access content and improve their education, that's one of the things that we can do. It's branded as the employer, and that access can be given to employees 24/7, and they can click on the different areas of focus that might be of interest to them and access video content and articles and things like that from various organisations that we've partnered with in the past. So we've set one up. Feel free to take the link down there again. Maybe we'll share that. It's just a temporary one, just for people to have a look at. So it's let'simproveworkplacewellbeing.org/ppma, and you'll see that. That's it, really. I know there's a lot of information there. We try and get as much in as possible because, again, the challenge is that everybody's at different stages and needing access to different information, different areas of focus. But hopefully everybody's taken something out of that kind of session personally, and can hopefully understand how it might be of benefit to their teams and to their employees as well. But thank you for listening. I'm going to unshare. Hopefully everyone's still there, Nisha, and not fallen asleep or gone anywhere. And if there's any questions at all, let's try and get some engagement. Put them in the chat or unmute, or if Nisha, if you've got any questions, more than happy to answer them.
Thank you so much, Ryan. I can't imagine anyone falling asleep. I think hearing from you today has been very inspiring. I think it's focused certainly my thoughts around my personal finance. So want to invite colleagues on the call if you'd like to ask Ryan a question or even a comment. Please feel free to come off mute or write it in the chat and I'll read it out. Ryan, I think one of the things that I found really interesting is the stage in life that we get to where we sort of build our foundation and our relationship with finances up to the age of 7. So I mean, are there any tips around that for colleagues that may have children and want to ensure that their children start off in a different place to where they were?
Yeah, really, really good question. So I've got 2 children. One is 6 and one is almost 3. And I think the fact it's really challenging because the fact that we wasn't taught the basics, you know, obviously I know the basics, hopefully, because of the qualifications and experience I've got. But as general people, we weren't taught the basics. So we don't know really. So how can we then also teach our children is really challenging. And we actually do a workshop specifically for that. One of the guys in our team, a guy called Will Rainey, who's fantastic. If you look him up on LinkedIn or whatever, he specifically focuses on money matters for parents and children. And he's got a book out, and he's really, really great guy. But I think some of the tips are to obviously get a bit of an understanding yourself around money matters, but things like giving access to money to children from an early age, so they can understand the value of money. Trying to get away from the kind of instant access culture that we have of wanting things now, immediately, you know, that then progresses to adulthood. And we see it now with credit, you know, finance, buying now, paying later, or not paying later, or not being able to pay later, as the case might be. So what I try to do with my son at the moment is pocket money, you know, so he does little jobs, you know, cleaning his room or tidying up or whatever it might be, and really valuing work and then being rewarded for that work, I think is really, really important. But then when it comes to spending that money, not just going and spending it all, and kind of the language that we use is really, really important, and how we kind of how we approach things. So rather than me saying to him, you should really save, you know, 20% of that money. I don't say 20%, he doesn't know what 20% is yet, but, you know, £2 out of that £10, you should really save. Flipping it on its head and saying, you know what, you should go and really enjoy £8 of that, spend £8 of that on whatever you want. And it might be a good idea to keep back £2 because there might be something else that you want in a couple of weeks' time. So there's a lot of things that we can do like that, you know, of how we approach things. But I think the key one is just getting an early value for money in you know, instilled in our children, and also the fact that they can save up and wait for things that they might want that are a little bit more expensive, rather than having like things that they want immediately, you know, because that can only cause problems. It's kind of gone the other way with my son. He got £40 from his nanny and granddad, and I thought he was going to buy a Nintendo Switch game. I was quite hoping he would, actually, because I quite liked it, but he didn't, and he took his £40 to the Smith toy shop. Other toy shop are obviously available, and he only spent £10 of it, and he still got £30 of it. And he actually, my mum came around to look after the kids earlier today, and he was very quick to tell her, nanny, you know, thanks for that £40. I've still got £30 of it. So I think, you know, poor kid, you know, he's got me as a dad, so he's going to be having to deal with all that sort of stuff. But hopefully that helps. I think that's a very helpful question.
And I'm seeing there's a couple more questions that have come in. So I'll read out the first one. We're looking to start a program to offer support to employees across the organisation around finance and wellbeing. How would you approach this, as people may be embarrassed to come forward to help? And then I guess just links to that. The second question is, we have a large number of care staff who are being paid just above the minimum wage in the public and voluntary sector. How can we pitch this topic at the right level, as it may often be living more hand to mouth?
Yeah, definitely two really good points. So we approach this. So we're working with companies at the moment like Hayes, Sky. Mental Health First Aid England are a client of ours. We've done workshops with them. Lindt Chocolate, I don't know how that happened, but we're working with them. And I think we approach it that within a company, you have people of all sorts. You know, you have directors and leaders at the top that might be earning more money, you would presume have better financial well-being. Possibly not always the case. I can tell you that from personal experience. Down to the lower end, people on lower earning that are maybe struggling. And it's really, really important that, as I said at the start, financial well-being applies to us all. It's not just dependent on how much we earn. So by trying to put in place various tools, various resources, group workshops, online content that they can just access in their own time, possibly one-to-one sessions, it can make it a lot more inclusive and holistic and relevant to people of all different stages and situations. As I said, that scale, if you remember that scale from kind of crisis to thriving, we work with that in workshops. We can separate workshops out so people, we're not going to run a workshop and you're not going to invite certain people within your workforce to investing in your future, or we run one specific workshop purely on higher earners, because there's certain things that demographic need to know about to improve their financial well-being that others wouldn't. So it's really personalizing the services and the initiatives that you offer to make sure it's relevant to people. To come forward to help again, it's how you position it. It's the comms that you use with the comms, the other content to try and explain what's available, the different services that we help with. I think a really good one where you may or may not have kind of a network of wellbeing champions or mental health first aiders and things like that. We start to work with them and start to upskill their knowledge and understanding around financial wellbeing, so that possibly people that might be struggling can go to them or someone that they trust within the organisation, and then they can get help. So that's sort of becoming much more prevalent at the moment. So a few things there. With regards to care staff, above minimum wage, longer term planning. Again, that's why we've tried to personalise this financial power plan. It's not about, we're not giving you a plan of where to go and invest or how much to invest or anything like that. It's for people to just get a plan in place to know what their next step is and what they need to focus on, because that's typically what we found, the thing that's holding people back. There's just too much. There's just too much to think about, and it becomes overwhelming and confusing. And what happens is people just go, right, I'm just going to not deal with it at all. I'm just going to try and get through. And it's only when you take some time and maybe have the chance, the feedback we've had from the one-to-one sessions, I've got to be honest, has been incredible, because it's the first time for a lot of people, whether they're in a good position or a bad position, they've actually had someone to speak to, a real human being that's not going to judge them, that's going to be experienced enough to explain things in certain ways. Many times they don't talk to their partners about this. They definitely don't talk to their employers about this. So it's the first time when we go into workplaces, we try and do a lot of this face-to-face as well, that in work time, they've had the opportunity to speak to someone. And it has a really, really big impact. So I know I was ranting a little bit there, but hopefully that's been useful. But again, if anybody that's asked the questions want to have a chat about it, I can try and point you in the right direction with certain initiatives. There's a lot of free stuff as well, a lot of resources and tools that are free that we can point you in the direction of to try and start, putting some financial wellbeing resources and initiatives together.
Thank you, Ryan. That has been really helpful. Just conscious that we're moving towards the end of the session. So on behalf of the PPMA, Ryan, I just want to say a massive thank you to you for the time that you've shared with us today. I'm sure there are a number of colleagues that would be quite keen to catch up with you. So you are Ryan at finworld.uk. Yeah, that's the email address. Yeah, perfect.